Another sell-off in U.S. Treasuries, sending yields sharply higher. The yield on the benchmark 10-year note now 3.21%. That is weighing on the stock market yesterday, seeing its biggest losses since June. Let's bring in Fox News contributor John Layfield to discuss. John, futures relatively stable this morning. Is that signaling to you that the sell-off yesterday was one and done, or is this wait and see ahead of the jobs data?
I think it's wait and see. It's not necessarily the jobs data. I think we know the jobs data is going to be pretty good. This economy has been absolutely on fire. It's hitting on all cylinders. The market is finally trading on economic fundamentals and not necessarily the president's Twitter timeline, which is a good thing to trade on. This is good for the economy, that the market can actually get a normalized interest rate environment. We were too low, and when you're too low, artificially low, you don't have a shock absorber in the system in case you have some systemic problem like oil prices. The U.S. economy still is by far the best economy in the world. You look what's going on in Germany, Japan, interest rates are rising in India. Those markets are being hurt significantly. The U.S. is still the place to be.
Do you think with the sell-off yesterday that investors have now priced in the fact that we might very well get 3 rate hikes in 2019?
Yes, I think they have. Look, this has been very well done by the Fed. I think Jerome Powell came out. I think he was a little too optimistic when he said this is going indefinitely. I think he misspoke a little bit. But yes, I think the Fed has done a great job of telegraphing what their moves are going to be, so there's no surprises to the market. The market is now trading on the economy. The economy is doing fantastic.
Okay, we get the jobs report for September. If you look, most people are saying the number, not the overall number, not even the unemployment rate. The number to watch is average hourly earnings. Let's just say, John, they go up 3% year over year. The expectation is 2.8, but let's say we get that 3. Does that send a psychological signal to traders that, the Fed's going to hike really fast and really strong?
I don't think so. I think the biggest thing out there right now is not necessarily is wage pressure. I think that's a good thing for the economy, and it could pretend that interest rates go up even more. Like, we're at 3.2%. If we went up to 4 to 5%, that's still just normalized rates. So we're still historic lows. I think the biggest thing out there right now is oil prices and potential inflation that comes with that.
So you're fine with the 5% rate?
I'm fine with normal rates, yes, absolutely. We've been artificially low for a decade now, and do I want 5%? I'd like 0% for my stock market portfolio, but it's not healthy for the economy. So, yes, I'm fine with normalized rates.
Okay, so everyone's talking about the midterm elections, honestly, just a few weeks away at this point. If you look at research, the year after the midterm elections has historically been the best year of the 4-year cycle for stocks. In fact, the S&P 500 climbs 15% on average the year after the midterms. Can you see the market going up another 15%, regardless of who wins?
I can see the market going up. Yes, it's funny that politicians, when they get elected, spend a ton of money that's not theirs to keep getting reelected and get public approval ratings up. I think that's normal of politicians. Look, most of Trump's policies. The president's party has lost 35 of 38 times their seats in the midterm elections. So history says that the Republicans are probably going to lose the House. Even if they do, though, most of Trump's pro-growth policies have already been put in place. In fact, not only have the pro-growth policies been put in place, the ones that could potentially hurt right now, the trade wars and the tariffs, they're the ones that are on the table right now. So I don't think anything happens with the economy, even if the Democrats take the House.
Got it. John Layfield, happy weekend.